Grow an actively managed portfolio of gold, silver, platinum, palladium, and rhodium with Auctus metals today.
This is going to be a disaster. 2026 is going to be a horrible year for U.S. financial assets. Stocks, bonds, cryptocurrencies, I think they all get killed.
Hello again, everyone, and welcome to another edition of the Auctus Edge, where we look to give investors the edge they are looking for. I'm your host, Patrick Vieira. Chief Economist and Global Strategist for Europac.com, Chairman of SchiffGold.com and founder of SchiffSovereign.com, and host of SchiffRadio.com, Peter Schiff, joins us today. Peter, welcome to the Auctus Edge. How are you doing?
I'm doing good. How are you?
I'm doing great. Glad that you're here. Quite a lot to talk about. We'll try and get through this. But, Peter, the obvious, you are in the precious metal space. When you wake up each morning and see the nonstop volatility, what goes on through your mind?
Well, I'm not seeing volatility so much as just up and to the right. I mean, gold and silver just go up every day. There's some swings, but we're at all-time record highs. Gold is over 4,700 right now, 4,750, and silver was over 95 this morning. It's pulled back, now it's back below 94, but, it just keeps making new record highs. Meanwhile, we're finally starting to see some solid strength in the mining stocks. Even though silver is backing off its highs, a lot of these stocks are now making new highs, which they should do because they're still ridiculously cheap. So there's just tremendous opportunity. I had, coming into 2024, I had about half of my portfolio in precious metals mining stocks. Now it's probably more like 70, 80% because those stocks have tripled and the rest of my portfolio hasn't gone up that much. It's gone up. All of my non-gold stocks have also done well, but not nearly as well as my gold and silver stocks. But, as big as 2025 was, 2026 is getting off to a much stronger start by far. I mean, we didn't even start moving last year until Q2. So as good as last year was, this year could be better, if you're invested in those stocks. I mean, for most Americans, I think this is going to be a disaster. 2026 is going to be a horrible year for U.S. financial assets. Stocks, bonds, cryptocurrencies, I think they all get killed.
Yeah, in fact, that was something that I saw you recently tweeted out where you had stated by the end of the year, holders of U.S. dollar-denominated assets and cryptocurrencies, including Bitcoin, will be substantially poorer than they are today. In contrast, holders of... Yeah, okay, go ahead.
Yes, exactly. I mean, we had a good thing going, although it was unsustainable, but we had a ride on the global gravy train. And, that enabled Americans to live beyond our means. We had higher asset prices and lower consumer prices. We didn't have to save, yet we still had low interest rates. And all that's coming to an end. I mean, Donald Trump has finally given the world a reason to do what it should have done decades ago. And that's jettison this whole U.S. dollar-based monetary system where we issue the world's reserve currency. And I think maybe the nail in the dollar's coffin ended up being Greenland. Who would have thunk it?
Yeah, man, that's a different topic altogether there. But let me ask you, Peter, with silver recently breaking out to new all-time highs above that $95 level, as you mentioned, and gold pushing past 4,700, are we in parabolic territory, or are we in that territory even yet?
For the metals?
Yes.
Well, I think that we're going to be moving up at a very sharp angle, whether it's parabolic or not. But I think there's, now a rush to get out of dollars and therefore into precious metals. And so you have a lot more people now that are waking up to what people like me were aware of for years. And so it's kind of been a slow migration for a small percentage of the population out of dollars into gold and silver. And as that was happening, the price gradually moved up from under 300 to 3,000, from 2001 to 2024. But the trajectory started to pick up in 2024 as the central banks got in on the action. And now in 2026, this is where I think the mainstream investors and the institutions are going to start participating. And so we're just going to have a lot more investor demand for precious metals, but not a lot of supply of precious metals to meet that demand. And of course, there's growing industrial demand too, especially for silver right now. So, it's the perfect storm of exploding demand and, relatively stagnant supply. And in fact, as far as for industrial use, the supply is going to be going way down because investors are scooping up all the inventory. So if you actually need silver, you're going to have to pay up to get it.
Yeah, and geez, a lot of us are the prices at the shops now. They're up, man. They're up there. But Peter, silver percentage-wise is outgaining, even outpacing gold. And this year already, gold is up some, I think, about 8% or so year to date, and silver is up about 30% or so year to date. Do you see sort of a rotation happening where gold investors may rotate into silver or even perhaps platinum?
Well, I think what silver and platinum have done is just catch up to gold, because gold really went from 2,000 to 4,000 with very little movement in those metals. And now all of a sudden the markets are catching up to where they should have been all along. So I don't think that you're going to see a big reduction in the demand for gold. I think that's going to continue. I think that what you had prior to the last few months was the demand was concentrated in central banks. And so central banks just didn't buy silver. They just bought gold. But now that you have private investors getting in on precious metals, they buy both. And in fact, in many cases, they lean more towards silver than towards gold. So I expect the demand for both metals to continue. And I would imagine that over the next several years, silver will continue to make progress relative to gold, because I think historically it's still underpriced. It's not as ridiculously cheap. We were over 100 to 1, earlier last year. And so you're never going to see, although never say never. I mean, probably not in my lifetime, but maybe in somebody's lifetime, maybe that'll happen again. But I don't think I'll ever see a situation where I can buy 100 ounces of silver for an ounce of gold. I think that's done. And in fact, you think silver prices are high at $94. Pretty soon, you're going to look back at silver in a double digit at a cheap price, because silver is still under $100 an ounce. It's not going to be under 100 for long, and then once it really gets above 100, it's never going to go below it. It's just going to keep on rising.
Yeah, it's a great point. I remember, guys saying just silver at under $20 is a good buy. Silver at under $30 is a good buy. And here we are almost at 100. But you said something pretty interesting where, the central banks have been buying up gold and that, elevated the gold price. Is it now perhaps the institutional investor who is seeing the how silver and platinum are both undervalued that may be pushing up the silver and platinum price now?
Yeah, well, there is investor demand finally coming in. And that is being fueled now by the exodus from U.S. dollars. The world is getting out of the dollar. And, that now it's a matter of economic and military survival. I mean, Donald just told the world, as long as we have the number one economy and the number one military, we could do whatever we want. There's no limit to what we can do. If we want to invade a country, who's going to stop us? And so the way to stop us is to, destroy our economy, destroy the value of our currency. And that's what's about to happen. The U.S. is going to lose this war without any shots being fired. We're doomed economically because we've been dependent on the world, and we just bit the hand that feeds us. And now they're going to stop feeding us.
Last year, we saw phenomenal gains in precious metals and in particular with silver and platinum, gaining roughly twice as much percentage-wise comparatively to gold. This may be the year you would want to rebalance your metals portfolio and get in on these gains. To do so, contact us at www.auctusmetals.com and we'll tell you how you can do just that. Yeah, we're going to touch on this very shortly, but I had a guy on X. He wanted to ask you a question. His name is Stephen Young. He noted that the Japanese bond market looks to be, let's say, unraveling a bit. What would be the effect on physical gold, silver, and mining stocks should we see trouble with the Japanese bonds?
Well, the Japanese bond market, yields rising, and now they're about almost 2.4% on the 10-year. They were this time last year, they were probably still under 50 basis points. It's going to put a lot of upward pressure on treasury yields. And it's also going to put downward pressure on other risk assets in the U.S. that benefited from the Japanese carry trade, because a lot of that margin debt is going to be repaid, especially if the yen starts to rise. I mean, so far, the backup in yields has not pushed the yen up. But if you start to see the yen rising against the dollar, that's going to force a lot of repatriation into Japan.
Okay, you've said gold, silver, the rally that we're seeing is a harbinger of a brewing financial storm. What warning signs are you looking at in the U.S. dollar? Is it the treasuries, the bond yields? What are you watching the closest right now?
Well, I mean, I know treasury yields are already backing up. They're at the highest they've been, since August last year, but they're going a lot higher. But you're going to see a break in the bond market and a break in the dollar. Gold and silver moved first, so they were the real advanced warning that there's a problem in the financial system, and you saw it first in precious metals. Now you're going to see it in the dollar and in the treasury market. And then eventually the stock market, is going to roll over too. Maybe it's already started here today. We'll see. Stock market may be the last shoe to drop, stocks, real estate. But we're in for a world of trouble here in 2026.
Yeah, I'll agree with that. Do you think the Fed will be renewing quantitative easing or maybe even aggressive rate cuts in 2026? And will it be due to political pressure or weakening economic data or perhaps rising yields? And again, how would this impact maybe gold, silver, inflation, or generally the economy, I guess, let's just say?
Yeah, well, we've already got QE. I mean, remember, we already have it. The Fed they're just not calling it QE, but they're printing money. They're expanding their balance sheet. They're buying treasuries. So it's already started. It's going to be expanded. They'll be doing a lot more QE later in the year than they're doing now. The question is, when are they going to fess up and admit that that's what they're doing? But also, Donald Trump has got the GSEs doing their own version of QE. They're buying $200 billion worth of mortgage-backed securities. All right, so the government is already artificially trying to manipulate interest rates lower. And as market forces try to push interest rates higher, you're going to see the government and the Fed doing more to try to artificially suppress them. Because we're all too broke. That's the reality, is that we can't afford the higher interest rates. And so we're going to use the government to try to prevent rates from rising, but that's what's going to fuel the inflation fire that's going to burn down the dollar.
Okay. And Peter, how do we implement this sovereign wealth fund with all these things that we're talking about?
What sovereign wealth fund? For the United States?
Yes.
We don't have any sovereign wealth. We just have sovereign debt. I don't know. We have to pay off our debt before we started accumulating any assets. We're 38.6 trillion in the hole right now.
Yeah, good point. Because I know that idea of a sovereign wealth fund has been floated around with the administration. So I'm just kind of wondering.
Yeah, well, the administration is full of economic ignoramuses. I mean, it's the blind leading the blind over there.
All right. And you've also said the U.S. cannot afford to service its debt, let alone repay it. I mean, with that, are we going to see maybe capital controls, higher taxes? Is it ever going to be paid off, or how will they even try to do it?
No. Paying off the debt is impossible. Inflating it away is something they could do. But of course, when they inflate it away, they destroy the value of everybody's savings. Everybody gets wiped out if you have dollars. So it's not like it's a get out of jail free card. You destroy the currency, you have hyperinflation. That's not going to be good. Yeah, we'll be out of debt, but we'll be in a whole new problem that's going to be worse.
All right, and you've often compared the current setup we are in with the pre 2008 warnings. Do you think the eventual crisis could be worse in 2008, given higher debt levels and more leveraged financial systems?
Oh, I mean, it'll definitely be worse for America. It won't. It will actually be a positive for the rest of the world. But it's not going to be a global financial crisis. This is going to be a U.S. financial crisis. And yeah, I mean, so the rest of the world's going to actually, be relieved of a burden, and it's the U.S. that's in for a world of hurt.
Okay. It's interesting because I think, a lot of people say globalization is dead. We're heading into some sort of regionalization. And within that, we're seeing, nations really looking to grab resources within their regions. How do you think this is eventually going to play out? Because we're seeing friction already between, what once were allies.
Resources are going to be very valuable. I mean, obviously, that's why we went down to Venezuela, because they got a bunch of oil. Apparently, we want Greenland because they have oil and gas, and they have strategic minerals. But, it's so expensive to extract them. That's why, they're not being extracted now. And I mean, people aren't exploiting the resources in Greenland because it's not worth it. It's like, it's very harsh Arctic conditions. And so whatever they got, it's very difficult to get it, very expensive. So, if we end up buying Greenland, we'll probably be overpaying for it. Meanwhile, we're broke, so we'll have to borrow the money or create a lot of inflation to get an island that we can't really do much with.
All right. And
I mean, maybe it has a strategic military importance, but we don't have to buy Greenland or invade it. I mean, I'm sure the Greenlandiers, whoever you call them, would be happy to lease us some of that, that Arctic tundra, so that we can have a base. They'd have no problem with that.
all right, so they'll give us the best of the Arctic out there, right? So we can have the most real estate gains. All right, and yeah, you did mention that point about Venezuela and the oil, but I mean, overall, this resource war, and again, silver is caught up in it, platinum is caught up in it. Do you see some type of government maybe taxation on it, or taking away some of the gains that people may get on it?
Yeah, I mean, that's one of the reasons I moved to Puerto Rico, is because I'm exempt from the capital gains tax. But I would not be surprised. I mean, the amount of money that I am going to make, I think, and that people that are following my advice or just doing what I'm doing based on their own, judgment, we're going to make a tremendous amount of money. And it's possible that they could try to target us with a windfall profit tax by trying to vilify us and blaming the gold speculators for the collapse of the dollar, and we should have to pay a huge tax. Why should we profit when everybody else suffers? I can see that kind of, demagoguery and scapegoating of the people who don't go broke, because most people will go broke and they will be looking to point the finger at somebody. And the politicians never accept responsibility. They're always looking to blame somebody. So they might as well blame the people who got rich and say, you see, you did something, like I have any power to do anything, all I could do is see the truth, and I could react to it, but I have no ability to influence anything.
Yeah, truth is so important nowadays. Peter, if you had to choose one, which do you think would happen? Confiscation of gold or heavy taxation of gold, where turn it in by a certain date or get heavily taxed afterwards?
Well, I don't know. It's hard to confiscate gold. I mean, you have to rely on people to turn it in, and I don't think most people will turn it in if the government tells them to. It's very hard for the government to find it. It's much easier to seize your your stock portfolio or something like that, or your real estate. They can see it. They can grab it. But I think as long as they have the printing press, that's going to be the primary tool that they use to confiscate wealth. They're just going to keep printing money. Now, if the money becomes worthless, right, we have hyperinflation, then, of course, printing money doesn't do any good. That's when they would start, nationalizing and seizing stuff. But the hardest thing to seize is going to be gold because it's the hardest to find. You don't know that anybody has it.
Yeah. You still see stagflation or recession or hyperinflation? I mean, I know you just mentioned hyperinflation, but stagflation still in the works?
Well, we have stagflation. I mean, we've had that, for years, but it's just going to get worse. It's not just stagnation. It's outright recession, depression, and it's going to be high inflation. Whether we end up with hyperinflation, the way you would classically define it, I don't know. I mean, maybe we avoid that. That would be the worst case scenario. But it's certainly, on the table now as a possibility. It's not like you can rule out hyperinflation. You can't. It is a real possibility of the way this situation is going to end up.
Right. Outlook for 2026, still early in the year.
More of the same. Gold and silver higher, gold stocks higher, dollar lower, yields higher, foreign stocks outperforming domestic stocks. It's still, obviously not too late for your viewers to get themselves properly positioned. If they didn't do it last year, hurry up and do it this year. You got my mutual funds. You can learn about them at my website at europac.com. 5 funds available everywhere, no load. You can also work with my advisors at Euro Pacific Asset Management. We have separately managed accounts. We have wrap accounts. Just talk to us about how we can help protect your wealth. And make sure you buy the physical gold and silver from me at Schiff Gold. And in fact, I have a new program, T-Gold. You go to tgold.com. I'm going to be developing a gold-based payment system and a platform for commerce, including tokenization. That's where I actually got the T-Gold, because you'll ultimately also be able to withdraw your gold in the form of a token. So you can have physical gold or you can have a token, depending on how you might want to use it.
Okay, that's good insight. Any other way people can follow you? I mean, your X account or any place else?
Yeah, well, the X account is where I'm most prolific. I've got about 1.3 million followers there now, and I constantly put my thoughts on X and put them out there. But people should also make a habit of listening to my podcast, schiffradio.com, on my YouTube channel at Schiff Gold. And, I'm on social media. So just follow me, subscribe to my YouTube channels, then follow me on X and TikTok, Instagram, Facebook. I mean, wherever, I'm on all these platforms. But also just make sure you tell your friends. We got to spread the word. There's so much misinformation out there. I'm one of the few people that's spreading the truth. I'm not the only one, but we're a small minority.
Yeah, I can see that all over the place on X and wherever else that, the truth is getting harder to find nowadays. And if you're brave enough to speak it, well, you better be brave enough to speak it. But, Peter Schiff, I want to thank you for your time. I know your day is just starting and you probably got a bunch of things to do. So I hope we can do this again soon.
All right.
And let's stay in touch.
Take care.
That was Peter Schiff from Schiff Gold sharing his insights on the markets and metals. And this may be the year for you to reallocate your metals holdings. If you'd like to know how you can do just that, do contact us at www.auctusmetals.com.